Okay, today's topic will be discussing on support and resistance level and how it's going to be used to navigate the forex market in our favor. So before we go on, when one is traveling, there comes a place where you would just have to stop to either eat or to go and find a restaurant. Maybe you are traveling from here to Lagos. If you get to Warri, you have a place where you go and eat to gain enough strength to even toilet, ease yourself. So that place you stop and reverse to go and look for where to go and eat, it is where you call your support level, because it's just like a car that let me give a scenario. That place is a normal place that people used to struggle. So when somebody is traveling on his way going up, he will do what? He will get to this place and do what? Make the U-turn. That U-turn is maybe there is a police person here, or maybe there is a resistant at this level that usually give that person U-turn. So once the person go and gather momentum, maybe there is another resistant here, support level here, then the person just gather the strength. By the time the force here, you can then have enough energy to break here. When you are bouncing football, have you studied it? Once you bounce football on the ground and it hit the roof, it will bounce back. The more it hit the ground, the more it gather momentum to bounce up and down. So this is what happened in the forex market. But before then, let me make a definition of what support and resistance is all about with what we have in our slide. Support and resistance. Support and resistance. Support and resistance is one of the most widely used concepts in the trading strategy. Everyone seems to have their own idea on how you should measure support and resistance. So, like, let's say that price rise from 150 naira or 150 naira for a dollar, 150 naira for a dollar to 350. And suddenly, market went down from 350 to 200. Instead of going below instead of going to 150, it went to 200. That 200 is called retracement. And that retracement just got to a support level. That support level is where price struggle. Maybe when the market was going up, it struggled to break that 200. Okay. Now it has gotten to 200. That is the low, it's the pullback level it can go to, and then gather momentum and rise to 450. Okay. 450. As it rise to 450, what happened? It pulled back to what? 350. So this 350 now, remember, this 350 now is what? A support level. The down one is called support. You can see it here. Then price got to 350 and move up again. When it got to here, move up and break to 550. Okay, 550. This is naira to dollar. And now, when it moved up to 550, it went down and got to what? 450. Remember, anytime there is a break, that place become another resistance. Remember, when it was going up, it used to get to this place and fall down. Here become resistance. Look at it, resistance, support, resistance. So now the market now rise again from 550 and went to what? 600 for a naira to dollar. Then at that 600, it began to struggle. It went down to 570. It struggle. It went down to 550. Struggle. Then went down to 550 and then start coming up. It keeps struggling to break here. It could not break. It struggle. Here become a strong resistance. Here become a strong resistance because market keep going down. It keep going down. It will come and when it get to this place, it become a strong resistance. That's why I keep doing until it will now break 550. And when it breaks 550, it will go down and get to 450. Are you seeing it? Now, when it get to 450, remember this place was a support level. Now it has broken that support level. This 550 level, when price, remember, price fell down from 600 to 450. And now it managed to rise up. When it comes to rise up, at that 550, market will start struggling if it doesn't have enough strength. If the market starts struggling, what happened? It will start going down again from 450 to 350. Do you see that? So now support and resistance is a level that price struggle to break, but it will surely break it. Don't forget that. A place I will show you in a real life chart. Let's go to a real life chart. Sorry. Let me delete all these things there. A real life chart, you will see what I meant. But don't forget, whenever you are drawing your support level or you need to apply your period separator. You need to apply your period separator. So as I was saying, support and resistance are level where price struggle to rise, or why going up, price is resisting. Look at, if you look from year to year, when price was successfully rising up and it got to this level, price fell down. So this level that price pulled back or fell down is called resistance level, because the price at this place, there are very strong resistance of price. This is called psychology, trader psychology, demand and supply. Maybe we have 100 traders here, and the total number of traders supposed to be 100, and suddenly 50% of the traders say, if I know that price will struggle here, so some of them started taking their profit. So in the process of price taking their profit, it pulled the price down. Okay, then once they discover that, oh, this is not just it's just a mere pullback, the 50% that left before will now join again and start doing what? Buying again. And in the process of buying, when they get to this same level, the force they have gathered, they will pull the price and break it and pass. So that's it. Let's check on a real life chart. This is a real life chart of I'm going to use a daily time frame. Let's check. Let us view the market clearer. If you can see clearly, this market has been rising up from here to this point. But what triggered the market to fall down here? there must have been a price level that triggered. And if you use this line to see clearly, you see that this level was a strong level. If you look at here, this is one of the reasons. If you look at for a price to struggle to go up at a particular level, it means that that particular level was once a support level. For this place to be, if you look at this place, why market struggle here? If you still trace back, you see that we have two types of support, and we have historical support, the past event of something or the past event of price struggling at a particular level. Price have always been struggling here. If you trace back again, you will see that there is a place where price always struggle either to go down or to go up. So whenever price struggle to go down, like I was saying, price have always been struggle here because of the constant price rejection. At this level is a level whereby price always struggle. So for a price to either break up or to break down, and this level, if it is in a downtrend, it is called support. Because when price was coming down, it also faced the same thing when price was coming down. The reason why it did not struggle here is because of the candle that was coming. The candle was able to break that level because the candle has a strong momentum. But on this note, when the first price, the candle came here, it rejected it because that level is a very strong level, support or resistance level. So eventually, this is the candle that broke it down and it went down to this level, okay? Then while rising up, did you notice something again? Price struggle here. So there's the same line, that same level can become support or resistance. It depends on the direction of the market, okay? If market is about to come up, that same place that here was support to this level, but currently it is now resistant, okay? Arrow resistant. Then it is now resistant. So you can see price struggled. Even when it came down, it's have to break it again. Remember, this same place now, why did price struggle here? If you look at past events, you will see that here is a strong zone again. Here is another strong zone. That is why price broke here and suddenly went up and got to this point again and did what? Pull back using the previous support, that level, that same level as a support level. Remember, when it was coming up, it was struggling to break that level, but currently, when it got to this place, it pulled back. So the top side here is called resistance, while here is called support. So we have two types of support. What even caused this support? It is the past event, past psychological events. So we have the two types of support and resistance. We have his historical support and resistance level, and we have dynamic support and resistance level. Historical support and resistance is the one that you can check like 6 months ago, 1 month ago, what caused, maybe price have not gotten to that level for the past 6 months or for the past 4 months, and maybe price has been going down. Let's say this is a level. Since price broke here, it has taken 6 months, and now price is about to rise up. So maybe all throughout this place, you did not see any price go to this particular level, a scenario. And then also the price starts rising up, it's rising up after 6 months, and then maybe 1 year later, when it gets to this place, it will still struggle. That is called historical support and resistance level. This historical is that the event that happened the past 6 months or 1 month, 1 year or 2 years can also withhold price at this level. Maybe price is at 700 naira, price always struggle. So when price will get to this place, it will bounce back to gather a momentum, maybe from here or from here. Maybe when it bounce back, it will get to this level and then gather a momentum to break it. Or sometimes price might struggle here for very long time. That's why sometimes if you look at here, this is it, the same thing. Price struggle here for very long time. Okay, so now as price keeps struggling here, it rise, it fall, it rise, it fall until it went down again. Okay, now we have what we call dynamic support and resistance level. Dynamic support and resistance that are not far from you. Maybe this is another support, the one that you can see from your eye. All these ones, them. Not the one that are very far away from you. The one that you can see. You know very well that if price is rising up, it will surely struggle at this level. This is called dynamic because it's very close to you. This is called dynamic. This is called historical because it's very far away from you. The one that are close to you, that you know that if price start rising up, price will struggle at this level because of this support here. So here now will become resistant. If price is eventually going to rise, here is where if you are to buy here, maybe you set your buying here, you should be targeting TP here. Okay, then the next one is if price eventually gets here and pull back and rise again, your next targeted take profit again should be here or here. Okay, so this close support and resistance that you can view with on your chart, these are called what we call that. This one are called dynamic because they are very close to you. Then we have what is called historical support and resistance. Remember, support and resistance is only a tool that gives the market strength to be able to gather momentum to break, to go further. Without support and resistance, your market, the price market will not move faster and gather enough. So, market does not move in a straight form, it moves in a zigzag form. So market need a zigzag direction. Let me show you what I mean. When you say zigzag direction, the market moves in a zigzag direction. Yes, market moves in a zigzag direction. In the process, now look at here, market started from here, it rises to this place, it pull back, it rise again to that same level, it pull back, but it was higher than the other one. It now rise again, break that level, it pull back. So the more until it finish doing what it will now start going down, it pull back again. You see, this is it. Now, do you know why market stop here and then move up? Because of this level. See it, this level. And this level is called what? Support level. Remember when it was rising up, it was what? Resistant. But if market is falling down, it becomes what? Support. Here becomes support. This same, don't forget, the same line, the same level can either be support or it depends on the direction of the price. Depends on the location of the price. So whenever you are drawing your support level, you must always insert your price your what is called your period separator. Now with this, now let me say I am using Fibonacci to draw my level now. And maybe market market have risen from here. Let's say from here to this place. Market rise from here. Let's say market rise from here to this point. Okay. As it rise from here to this one, I notice that market want to go down. I will use my Fibonacci and I will measure from the, since I've told you when you are drawing your Fibonacci, you draw from bottom. If it is an uptrend, from bottom to what? To the top. So I want to get my Fibonacci retracement. Where would this, because this is the level where my resistance, this level is a strong level. Am I right? So because this is the level, I want to know the Fibonacci retracement level is this. I cannot just say Fibonacci it is 54 point something. No, I must have my Fibonacci level to know the level where I am suspecting the market will get to and continue going up. Okay, now I will draw my Fibonacci. This is my Fibonacci. I will connect it from my bottom to my top. So now with the help of my Fibonacci, I was able to say, okay, this is okay, this is okay. Then you can then take your line and say this is Fibonacci. This is 50.0 Fibonacci. Oh, this is 50.0 Fibonacci. I think that if this price pull down to 50.0 Fibonacci, it will start rising up. Maybe you don't want to sell, you don't want to sell, because the thing is too close. So you close your mouth, you watch out. Once price get to 50.10 and form a reversal candlestick pattern, then remember what I told you about this reversal candlestick engulfing pattern, engulfing pattern. Then the next thing you say, okay, since engulfing and pattern has formed, you look out for the next candle that is higher than the candle, which is this candle. You can then set your entry here. Then price rise from here, it rise and got to this point. So how do you know your Fibonacci extension? Now with the help of Fibonacci extension, you can then say, oh, this Fibonacci extension, then how do I get my take profit? Since I've known where my pullback will reach and then start rising. Because at that level, that is where you start looking out for what we call either reversal, we call reversal candlestick pattern. So now you have seen your level where where market will pull back. Remember, Fibonacci retracements is used to know where your retracement will reach, and with the help of the support and resistance, the previous resistance, the previous level. Now, market was going up, going down, and when it pulled up, it will always struggle here. When it was coming down, it struggled here. And if you notice that when it rise, it struggle here. So as market eventually break that level and go up and want to pull back, you will know that this is the same level. This level is where market will surely get retrace. This is the level. This level is where market, you now use your Fibonacci retracement to measure, to know the measurement. This is a length. You want to know of which of this length level will this market get to and start going up again. You see, market pull back and then move up to this level. Now, I want to know the Fibonacci extension because we use Fibonacci extension as our take profit. I want to know Fibonacci extension I should use for my take profit. Since where is my next support level? If this market eventually resume, where will be my next support level? I will know that this is the next support. This place is a very strong level because market got to this place. You can see and pull back. So I will use my Fibonacci 161. I will connect from the beginning of my retracement to the end of to get my Fibonacci level from top to bottom. If you are in an uptrend, okay, this is it. So my first 161 is here, and you can see it is the same level. You see it. This thing does not lie. You see, your Fibonacci level have gotten to 161. First, at least 161.8 should be your number one take profit first. If price did not get to one, now look at it now. Price got to 161, but the second one, price did not touch 161. It shows that the strength of the market is getting weaker. This is the first candle that hit you take profit. It makes sure it touched 161 before it pull back. And the second one did not reach 161 again before it now start making the pull down. But this pulling down did not break the previous low. So the thing is still in an uptrend, okay? But I believe I have explained this class very well. You go and repeat this class, but let me pause it then.